The Reserve Bank has identified financial pressures on households and SMEs as the new risks to the financial system, adding to other challenges such as the escalating global conflict, deteriorating public sector debt ratios, rapid capital outflows, critical infrastructure failures, and South Africa still being on FATF's grey list. The central bank says financial distress among households is also evident in data collected by the National Credit Regulator. It shows that of the almost 28 million credit-active consumers in the first quarter of this year, just over 10 million had impaired records. The Reserve Bank's head of Financial Stability Department, Nicola Brink, says from March last year to July this year, non-performing loans rose significantly from 257 billion rand to 304 billion rand.
From March 2023 to July 2024, non-performing loans of banks increased by 47 billion rand to 304 billion rand, and the NPL ratio rose to 5.7% of total loans. This is well above the long-term average. As shown in the two graphs on the left, the worst performing portfolios are credit to small and medium enterprises, as well as unsecured credit to households, with NPL ratios of 8.7% and 15.6% respectively. Mitigating factors are the fact that banks manage their credit risk well, with sufficient provisions made against non-performing loans. The graph on the right shows an increase in bank provisions, and the coverage ratio, that is it's red here, pinkish reddish line, is well above its long-term average. Interest rate decreases should also provide relief.
Reserve Bank Governor Lesita Kganyago says other risks facing the financial sector include cyber attacks and climate change.
We also identify certain long-standing or structural risks, such as South Africa's low and inequitable economic growth, the implications of climate change for the financial sector, and the ever-present risks of cyber attacks disrupting the financial system.
The Reserve Bank says the outlook for financial stability improved since June of this year on the back of a better fiscal outlook, decline in load shedding, lower interest rates, and more optimistic investor sentiment. Gloria Sefakomosi, SABC News, Johannesburg.